Financial freefall. The Dow plummeting 600 points.
What's going on in the stock market and the banks is a freight train.
A battered U.S. economy.
The need to tackle our deficits.
Leading an unstoppable global fear factor. Asian shares slammed. European markets pummeled. Oil down nearly 20% in a week. All triggering a rush to gold and America's downgraded debt. Tonight, the titans of the street and the global reach of CNBC here to answer that critical question. Is your money safe? This is a CNBC special report. Markets in turmoil.
With Melissa Lee and David Faber, welcome to our special coverage.
A frightening ride for your money to start the week. Every single stock in the Dow 30, the S&P 500, and the NASDAQ 100 finishing the day lower. Some of those drops exceeding 20%, David.
And you know what else? The last time the Dow started in August this badly, this man, can you pick him out? Yeah, that's Grover Cleveland. He was the president of the United States the year 1896. Here's another very sobering statistic. The S&P 500 over the last decade, the last 10 years, is down now 5.4%.
So our mission tonight is to help you make sense of this historic decline and get you ready for what we imagine will be another wild day, one way or the other, for the markets tomorrow. And we'll get a clue as to what it may be like from Asian markets tonight.
Of course. In fact, let's take a check on early Asian trading in order to see how the U.S. might be setting up. Over in Japan, we're seeing some selling pressure on the Nikkei, down about 2%. In Australia, down by almost a percentage point, and the South Korean Kospi index is down by almost 4%. Taking a check on U.S. futures, and we should, of course, caution you that this trading is very thin at this hour. Right now, we're 6 points higher on the Dow futures, and on the S&P futures, we are also seeing a little bit higher. We begin tonight taking you inside this brutal couple of weeks here, as well as around the world. Our Simon Hobbs here to tell you a lot more than just about the downgrade today. Simon?
Yes, Melissa, very good evening to you. I mean, clearly today was rough for those that are long of the market, but it's been that way, frankly, for around 12 trading sessions. Take a look at this. In fact, in the last 12 trading sessions, the Dow has fallen a staggering 15%, or the best part of 2,000 points. Now, with the Treasury telling us that America could no longer pay its bills from August 2, clearly Washington's debt fight dominated those headlines as we watched what happened or what didn't happen day by day by day by day as we came closer to that Tuesday deadline, so the market became more nervous. Coming into Monday, of course, a deal was done, but then S&P still stripped the United States of its AAA rating Friday night because the agency says America's debt will still rise despite that deal, and political divisions prevent a new austerity drive anytime soon. But that's clearly not the only reason why the Dow has fallen 15% over 12 sessions. It actually marks the exact period during which fears grew day by day by day that European contagion would spread to Italy and Spain. And as time went on during that period, again, the market became really more and more nervous by the day, only to be brutally disappointed last Thursday when at the ECB meeting, Jean-Claude Trichet failed to signal that it would buy Italian and Spanish debt in the open market to drive down their borrowing costs. Then, only today did the ECB sweep in, spending €2 billion, but by then the fear had further damaged stocks. But overlaid on all this, and perhaps the most important reason why the market has sold off, is fear that economic growth in America is slowing down very rapidly. First, July 27, the durable goods number died. Then, July 29, we learnt the economy barely grew in the first half of the year. August 1, the Institute of Supply Management told us manufacturing was barely expanding, and 2 days later, that growth in the service sector was also slowing. Now, Wall Street players put the risk of another recession here in the United States at 1 in 3. But the rest of the world is also slowing down. You can see it reflected in the stock markets right over in Asia. This is what each of these has lost during the last 12 trading sessions. You see Japan down 9%, China down 9.5%, Singapore down by about 9%. It's true of the Europeans as well. Look at Germany, down almost 19% in those 12 trading sessions. And closer to home as well, look at Argentina, down 18%. Brazil has lost 19% in that period of time. But the eye of the storm guy remains very much tonight the United States. Back to you.
All right, thanks very much, Simon. Yeah, those are some sobering numbers there. And in fact, we've got a few more as well today. The fourth largest volume day in NYSE history. The Dow's 634-point drop, by the way, was its 6th largest ever. And, well, perhaps back to my statistically relevant index, the S&P, a broader, of course, reflection of the overall market, down 6.66% today. Yeah, I don't like those numbers either.
That's
oh,
nasty.
man, that is just not good. CNBC's Bob Pisani is with us. Take us inside what really was an epic slide today.
Yeah,
Roberto.
you can't really put a good face on it. 6.66, yikes! Let's take a look at the full screen here, give you some statistics. Worst percentage decline for the markets since December 2008. $750 billion in market cap gone again today. So do the math here. It's about $2 trillion in the last couple of weeks. Financials led the decline, down 10%, just catastrophic declines in some of these big names here. We're in bear market territory, down 20% in the Russell 2000, the small cap index, the Dow transports. Even Germany is down 20% in the last couple of weeks. As for the volume, David's right here. 10 billion shares in the NYSE stocks. That is the 4th heaviest volume. And you get a good idea of the selling intensity. Look at the SPDR, which is the ETF for the S&P 500. This is the biggest ETF that's out there. Selling really was on the heavy side, but it intensified dramatically around 215, 230 as it moved down to new lows. They tried to buy the market as the Dow was down about 500 points. The volume, though, never really picked up dramatically as it was moving to the upside. They sold right into the rally. That's an indication that there wasn't a lot of buying interest, even though a few people tried. We ended near the lows for the day. Hey, speaking of corrections, you know what's in a correction? Oil. Oil's down 20% in the last couple of weeks. Look at this, down another 6% today. At least there's a little bit of good news for consumers. We'll see if that turns up at the pump and how quickly that happens. Finally, I've been asked why the futures dropped 10 points about 6 p.m. Eastern time. Of course, there's a lot of risk managers that are out there, people who manage risk for these hedge funds that are out there that are probably using futures to hedge at this point, though this is very, very illiquid at 6 o'clock. Remember also a lot of the Asian guys, while the Far Eastern traders coming to work right about now, and they may well be forced to sell as well. Finally, Carl, I would note we're getting some very important China data tonight, CPI, PPI, and industrial production very shortly. Back to you.
Yeah, that's going to come out later on tonight and will be key if you're thinking about potential slowdown in China, adding to all the problems that the world already has, Bob. Thank you for that. If there was one story, though, in the markets, it may have been Bank of America, the biggest loser in the Dow and the S&P today, down 20%. CNBC's Mary Thompson here to explain what can only be called a violent move lower. Mary.
Well, financials were the weakest among the week in Monday's trade.